So we've got Brad from PwC. Brad, your title is National Productivity Partner. Now, what does that actually mean, and what had PwC decide to create such a role?
I guess, so I lead the National Productivity Market. We call them a market priority. Last year was a proposition. It's coming up to June 30. I don't know what we're going to call it next year. But it's about the topic of productivity. It's a global initiative. So this is in partnership with the UK, European, and US firms within the different consulting groups. So I run the strategy practice in Sydney, and connect globally with the other productivity, thought leadership people.
That's a great. I mean, that's a challenge for all of us. It's one of the big factors. How do you be local and global at the same time? That is often a challenge for many of us.
Well, I guess how we manage that is just through the infrastructure. So we have regular catch-ups. There are specific budgets dedicated for research in different parts of the world. Different parts of the world focus in different areas. So we're very much more focused on resources and mining. In Australia, from a productivity perspective, the US is much more around financial services, manufacturing, although we do import some of that knowledge and capability here. We are, as a professional services firm, you've got to be able to manage that global capability pretty well because clients want you to bring the best of what you can to their problems. So we manage that through mobility and all those sorts of things. So it's probably not as challenging for us as it might be for other organizations because we actually have to do it to survive.
There's a pretty strong incentive there, Peter, to survive. What have you got for us this morning?
I've got a presentation that I promised Peter would build on what he was saying, not duplicate it. But I do have one overlapping slide, so I'm going to apologize. I think it's not till about slide 3 or 4. So the title is The Case for Innovation, and that's been the common theme here. I'm a big believer in that. That probably goes on, and this is actually a topic I'm quite passionate about. I started off as a reservoir engineer in 1989 when I don't know if anyone remembers what the oil price was doing in 1988. 1989, it was a really bad time to try and get into that industry. I thought about driving cab for a while. But through that sort of 10-year period where I was working in that industry, we played around with a lot of different new technologies. So this is when you started getting horizontal wells, which you might read about in the press around shale gas and coal bed methane. New fracking technologies, 3D seismic, all the stuff that's actually quite commonplace right now was developed back then in the face of real declines in pricing. So innovation is quite important, but actually what we're pushing for here more is also customer-led innovation, so I'll get to that. So to start off, just look, some contextual slides. Simply put, innovation trends and new drivers drives productivity, which drives shareholder returns. Okay. Now, a lot of what I'm going to talk about are how we think about productivity is very much focused on the private sector, but there are some parallels that you can draw within the public sector as well. Okay. So we define productivity. So you've got the definitions that Peter talked about previously, but we define productivity in PwC as the change in economic profit per FTE. So economic profit is basically it's an absolute measure of value creation on a pre-tax basis. It's your EBIT less your invested capital times your pre-tax weighted average cost of capital. So it's very much an economic or a financial definition of value creation. I had no idea what it was as an engineer until I actually went to business school. We divide that by the FTEs. Why? Because that takes into account people's business models. So if we think about economic profit, that's your P&L and your balance sheet. And your FTE is actually how are you choosing to create that value. So what is the innovation that you're putting in your business models? What do you choose to do? How do you partner up with other suppliers, other providers to actually deliver value? Okay. Now, why is that important? Well, it's important for the private sector in particular because we've looked at the Australian market, and if you can improve EP by $1, that has a 20-fold impact on your share price. Okay. It depends by industry, but that's an average. So why is this focus on EP becoming more important from a corporate perspective? Well, capital is getting a lot harder to get. So you can see that capital spreads are increasing. People are lending out less. So companies are getting a harder and harder time getting financing, and that goes back through to governments as well. Capital is becoming scarcer and harder to source in the market. So in the face of that, and so this is my one overlapping slide with Peter's talk, is that actually, even though it's getting harder to get, we're not doing a very good job with it. Now, there's lots of reasons for that. As Peter pointed out, we've been investing quite heavily in a lot of industries, and you can see that mining would have has had a big pull down on the overall capital productivity. But in general, we're not doing as well as we could. And I put everyone sort of blame, so labor productivity, surprisingly, is actually doing quite well. Again, mining not so well, so this is, again, the area that I focus in, but it's, since 2002, has been improving. And I guess what you look at on the right-hand side there with mining, you can see the workforce participation, basically the hours going up dramatically. We're not really getting any output from that. So that's a big issue. So that's sort of the context. And I just want to talk about what we've done. So this is a global study that we've done, again, at different points in time. But within Australia, what we've done is we've done a combination of internal and external analysis. So the internal analysis we've done is we've surveyed 154 companies, okay, ASX 200 companies. The external analysis we've looked at is obviously the financials, so that's why I started with the definitional slides around the economic profit per FTE, because we've been looking at their performance over time, and we've been using the survey data to try and triangulate or correlate performance to how companies view productivity and how executives view productivity within their own businesses. And look, we feel we've got a pretty good spread. 67% of services, 23% manufacturing and extraction, 9% are general combination industries. If you look at, we've got a little bit of FS, a little bit of healthcare. 80% of the companies were over 200 million, 64% were over 500 million in terms of revenues, and 46 were over $1 billion. So we feel we've got a pretty good spread of data in terms of participants through the survey. So we took all the responses back and we said, look, we got it down to sort of 5 different levers that people pull in terms of productivity. So importantly, none of these are cost reduction. I work with a bunch of accountants, and whenever you talk to them about productivity, they think that's about headcount. It's actually not about headcount at all. So if we think about the 5 big things that you need to think about, one is knowledge intensity. So actually, how well do you manage knowledge? I think that was the gist of Colin's question to me earlier. Actually, how do you manage knowledge across your business, and particularly if you have a global network? If you can do that well, that's a distinct competitive advantage. How well does your business manage complexity? So again, complexity is not a bad thing. If you can manage complexity well and the market values it and is willing to pay for it, you can actually make very good returns in a very complex business. So it's not about eliminating complexity. It's about deciding what's the level of complexity that you need and managing to that level properly. Digital, we've all heard about digital. It's these disruptive business models in particular. What I'm encouraged about is actually, while our retailers have in particular been getting absolutely annihilated by offshore competitors, we are starting to see emerging digital players here, which I'm quite encouraged about. Relationship capital. So how well do I manage my basically my partners? And when we spoke earlier before about business model innovation, but actually it's not just your supplier partners. It's also how well do you manage your relationship with your customers. So actually, if you're a B2C business, what is your social media strategy? How are you actually leveraging all of these technologies and networking platforms to actually improve your engagement with your customer? And then finally, global integration. So basically, how am I spanning across the globe, leveraging scale, economies of scope to actually provide either different or lower cost products. Okay. So the other thing that came out of the analysis, and this was to me the most interesting thing, and I'll have to read out, I don't know if anyone can see on the bottom there, but I'll read them out. But one of the things that we asked is where actually do you focus your productivity investment? So if you're going to set aside a certain percentage of your budget, and I think there was a piece of data said sort of roughly 4.1% as a percentage of GDP, companies would obviously be less than that because that's also education and everything else. But overwhelmingly in Australia, the investments are in what we'd call back-of-house activities. supply chain, operations, those sorts of things. Very much focused on cost of delivery. Okay, not a bad thing, that's quite necessary. But if we contrast that with the US, and so I'll use them, and by the way, if you've read my bio, I'm Canadian, so I'm not putting this up to say that the US is this amazing place. I've stared at them for a long time from a much colder country. But particularly when we look at the productivity stars in the US, so the companies that have year-on-year delivered productivity gains, overwhelmingly their investments are in what we call the front of house activities. So this is product development, market research, just product offering and risk management. So basically very much focused on the customer. Okay, so when things get tough, double down on the front end of your business. Not saying that actually an efficient delivery system is important, absolutely is, but it shouldn't be the overwhelming focus in the business. So this is a reasonably complex bubble chart. What we've got on the left-hand side there is the change in economic profit per employee. So basically our productivity measure against absolute economic profit per employee in 2012. So 2006, 2011, who improved, or what was it, or I guess what was the trend, and then an absolute measure in 2012. Now, what's interesting is, given where we're focusing our attention as corporates, you would expect to see this, right? Basically, everyone kind of hovering around zero. Because if all you're trying to do is match your competitor in terms of their cost structure, that's an undifferentiated Me Too strategy. So the market's going to compete away any excess returns you might make. So what you're going to expect to see is a whole lot of people clustering around zero, and some people that couldn't get it right and are losing. Okay? You do have some, there's a few. And so when we looked at the ones that we have, and we did actually draw a bit from the insights that we were getting offshore, because you get a lot more of them. But the other thing that was interesting is in terms of driving productivity benefits, it's not actually just a factor of industry. So not everyone has to be Google, right? There's lots of really boring mining companies and resources companies that actually drive productivity year on year. It's not about economies of size. So again, What If has outperformed BHP and Woolies in terms of productivity. And it's not just about new business models. So again, Orca, very, very traditional business, been around a long, long time, manages to deliver productivity growth year on year. And then finally, it doesn't require headcount reduction. So INET, it was interesting, I showed this slide to one of my group of partners in Melbourne, and I had the client lead partner for INET in the room, and he said, it's really interesting. What they would say is their core competency is product failures. Actually, how quickly can they fail products? So they've been building up headcount, and they've been growing in size, and they've been generating productivity while they've been doing that. Okay? So we don't like leaving without saying, here's what we would do. That's what I get paid for. Look, there's 5 things that we think. Now, again, you'd apply these things differently and depending on your business and the situation that you're in. But look, the 5 things you need to think about, firstly, is determine the biggest leverage points for the company to drive productivity growth. So, as just on the previous slide, there's a lot of misconceptions about actually where those opportunities sit. Assess the productivity drivers in the business that are creating the biggest impact on shareholder return. So actually, what are your big levers? If you increase your margins by 5%, what does that actually do to your business? Okay, so is there pricing? What can you do? No question that actually operational efficiency is critical. Okay, but it's not the only thing. We need to focus on growth. We need to shift that focus. And again, where the U.S. is right now, where some of the overseas economies are right now, might be just where they are in the business cycle. Hard to say, but we think there's a big opportunity for Australian companies to actually start focusing on growth and their front of house activities. I guess the big thing, the 4th one here, is what are the areas within a business that need to actually collaborate? Because the reality is, businesses create value across their operations, not within individual silos. So typically we tend to focus programs on individual parts of the business without actually understanding what the impacts are up and down the chain. So it's actually understanding what that interconnectedness looks like and manage it. And then finally, defining a holistic integrated measurement system focused on productivity. It's critical for growth. So when we, again, I haven't put this slide in here. I thought I'd save you from too much PowerPoint. But when we look at the measures at the board level and the senior management level of most Australian companies, they are largely P&L focused. They don't think about actually long-term returns and economic profit. So for us, even at the high level, we start tracking that. Okay? And that's it. Thank you for your time.
Again, as to the others, but just take a minute, just have a quick conversation with people next to you, and then we'll open it up for a conversation and some questions.